Something big just happened in the crypto world. Hidden inside a government report, the United States may have quietly signaled which altcoins it sees as important for the future. This isn't speculation, it's written across hundreds of pages and backed by influential players shaping the market. A White House report that changes everything. On July 30th, 2025, the White House released a massive 168-page roadmap on digital assets. This isn't just another regulation document, it's a declaration that the US is stepping up to become the global leader in crypto innovation. The report lays out clear policies for stablecoins, DeFi, and emerging crypto technologies, making it one of the most impactful crypto documents ever published by any government. Even ABC News described it as a policy meant to usher in a golden age of crypto. And the White House itself posted, "Together, we will make the US the crypto capital of the world." Under this plan, the government is providing a regulatory framework that gives businesses and investors something they have been waiting for: clarity. This roadmap comes during President Trump's administration, which has made no secret of its pro-crypto stance. Beyond the report, there's anticipation around a potential strategic Bitcoin reserve, a state-held stash of Bitcoin that could change the market dynamics completely once announced. Stablecoins. One of the biggest takeaways from the report is the focus on stablecoins. These assets are pegged to traditional currencies, offering the stability needed for real-world payments. On July 18, 2025, the Genius Act became law, setting the first federal rules for stablecoin issuers. This act is crucial because it bridges the gap between crypto and traditional finance, making stablecoins safe and practical for everyday use. With regulations now in place, stablecoins can move into mainstream payments, remittances, and commerce without the uncertainty that previously held them back. The report's hidden signals. The report also highlights several crypto projects, giving them unprecedented government acknowledgement. Bitcoin is praised as digital gold, mentioned 130 times. Ethereum is recognized as the foundation of decentralized applications, while Solana and XRP are noted for their transaction speeds, making them valuable for global payments. The report also touches on Chainlink and Ondo for their roles in tokenizing real-world assets and Uniswap for leading decentralized finance. Interestingly, Plume and Hedera are included as innovators in regulatory sandboxes, spaces designed to safely test new technologies. But the most telling parts of the report aren't in the main text, they're buried in the citations. References to the A16Z State of Crypto Index and the DUNA for DAO paper hint that certain venture capital-backed coins have the spotlight. This is where the story gets even more interesting: the power of a 16Z and political influence. The report cites research from a 16Z Crypto, a venture capital fund known for shaping narratives in tech. Founded by Mark Andreessen and Ben Horowitz, a 16Z isn't just another investor, they're a force with deep connections. Both founders donated $2.5 million each to a pro-Trump super PAC, totaling $5 million. Some critics argue that their financial support and industry presence may give them influence in shaping crypto policy, though this remains a debated topic. Their portfolio is filled with projects that align perfectly with the report's direction, including 3 altcoins that stand out right now: Near Protocol, Avalanche, and Layer 0. Each one is positioned to thrive under the new regulatory and institutional environment. Near Protocol. The first coin to watch is Near Protocol. Priced around $2, Near remains far from its all-time high of $20. Even with token issuance over the years, its current market cap of $3 billion is still well below the $12 billion it reached during its peak, meaning there's massive room for upside. What's catching everyone's attention is the surge in institutional buying. Big money is flowing into NEAR, a trend similar to Bitcoin's accumulation back in 2020. Back then, the institutional buy-to-sell ratio for Bitcoin hit an incredible 97-3. Shortly after, Bitcoin exploded in value, delivering a 400% gain even to those who bought at the local top. Near's technicals are also lining up. The weekly charts show hidden bullish divergence, with price wicks forming lower lows while the RSI trends upward. The last time this pattern appeared was October 2023, when Near rallied 800%. While hitting previous highs may be challenging, some analysts suggest NEAR could see meaningful upside if institutional accumulation continues. and market conditions mirror those of past rallies. Avalanche. Next is Avalanche, another Layer 1 blockchain heavily backed by A16Z. Like Near, AVAX trades far below its all-time high of $125 from 2021. But recent whale movements, including a $28 million transfer from an Ethereum whale, suggest accumulation is underway. On the charts, AVAX is forming bullish divergences on both the daily and weekly timeframes. The RSI has started to recover, hinting at a possible breakout. Price action shows AVAX sitting at key support, and any move above the Trump pump trend line could trigger a strong rally. Market watchers believe AVAX could experience strong momentum if it breaks key resistance levels, although outcomes remain uncertain in today's volatile environment. Institutional interest combined with whale activity makes AVAX a solid candidate for growth, especially in a market where regulations are stabilizing and Layer 1 blockchains remain critical infrastructure. Layer 0. The third coin, and perhaps the most intriguing, is Layer 0. Unlike Near and AVAX, Layer 0 is not just a blockchain, it's a Layer 0 protocol designed to connect all Layer 1s. It enables cross-chain communication, allowing ecosystems like Ethereum, Solana, and Cardano to interact seamlessly. Many think of Layer 0 as a bridge, but it's far more. It's a messaging protocol with multiple revenue streams. Applications use it to send data between chains, and each message must be verified and executed, generating fees. In the past year alone, Layer 0 executives earned $9 million from fees, proving this is a real business with real revenue. The price action hasn't been pretty. After buying in at $3.50 in October 2024, prices doubled briefly before dropping. But the charts now suggest a bottom is forming around $1.50, a strong support level. If Layer 0 retests its support zone, some traders see it as an interesting area to watch, but timing the market always carries risks. What makes Layer 0 stand out is its investment structure. A 16Z has a 3-year lockup on its Layer 0 tokens, meaning they can't sell until 2028. This incentivizes them to push the project and its price higher over the long term. Backing from Circle Ventures, OKX, OpenSea, and Sequoia Capital adds even more weight. Layer 0 also faces competition from Wormhole, but with this level of support and an expanding use case, it's positioned as a top player in cross-chain infrastructure. Other projects shaping the market. While these three coins are tied to a 16Z and the report's direction, the broader market is also shifting. The White House report confirms self-custody as a right, supports peer-to-peer crypto use, and rejects the idea of a central bank digital currency. This creates an environment where decentralized projects can thrive without fear of sudden crackdowns. In addition to Near, AVAX, and Layer 0, the report's recognition of Bitcoin, Ethereum, Solana, and XRP solidifies their roles as foundational assets. Ethereum in particular has doubled in just 3 months and now trades around $3,800. Billions are pouring into staking and yield strategies on platforms like Lido, Rocket Pool, and Frax. Ethereum's passive income economy continues to attract institutional and retail investors alike. Outside of the top names, newer projects are also gaining traction. Best Wallet has raised over $14.3 million in its pre-sale, offering institutional-grade security and cross-chain swaps. Its best token powers features like reduced fees, early access to launches, exclusive loot boxes, and cashback rewards. Snorter Token, another emerging player, is making waves with its Telegram-native trading bot. This bot allows users to snipe trades, mirror wallets, and track positions directly from chat with lightning-fast execution. Holding SNORT cuts trading fees significantly, and with expansions planned across multiple chains, it's being called one of the most undervalued tokens in the pre-sale market. A new era for crypto. The White House crypto plan is more than policy, it's a statement of intent. With regulations in place, institutional money flowing, and key projects gaining recognition, the market is entering a new phase. For investors, this could be an interesting time to watch these market trends unfold. Near Protocol, Avalanche, and Layer 0 are positioned to thrive under these conditions, each backed by strong fundamentals, institutional interest, and powerful players like A16Z. Combined with opportunities in Ethereum, Best Wallet, and Snorter token, the market is offering a range of assets to watch closely. The real question is, which of these projects do you think could benefit the most from this new regulatory environment? Let us know your thoughts in the comments and stay tuned, because the next chapter in crypto is just beginning. Disclaimer: this video is for informational purposes only and does not constitute financial advice. Always do your own research before investing in cryptocurrency. The market is volatile. Invest responsibly.